NASDAQ. So since this sharp move away from this monthly level, we've now been, kind of moving sideways since last Wednesday. We do have this inversion fair value gap that has held price from from retracing lower. So I want to see that this continues to hold up and we continue to see higher prices. The next, we still have not taken out this high here at 30,077. So that's the move I would like to see for NASDAQ to get above these old weekly opening gaps here that are in price. This is currently what has been holding price lower. So we're getting this consolidation between these two reference points, these two gaps. And with the rule, whichever one breaks first is the way that we'll be going. I'm anticipating these gaps to start to fail. And I actually don't want to see this gap retested because if it does, I think that it's going to we're coming lower. So I want to see that this resistance breaks soon and we start to see high prices again. NASDAQ on the 4-hour. We getting some sideways movement again. Tuesday, see sideways for the most part. Wednesday, and well, yesterday sideways, and today for the most part we're seeing some sideways movement as well. See that price is already taken out this its previous day's low in Asia session. So now that we are starting to look like we've created this swing, I want to see it stay above here, start to move away, and if it does, we can get that 30,077 level today, possibly, which is the okay. So these are equal highs. We have last week's previous week's high as well around this area. So it could get denied again today, like I said, because the market could just be moving sideways, waiting for the CPI numbers to come out. You see that we do have this fair value gap that price is traded into on this daily. I didn't note it, but it's a small gap here. Small gap. So price should continue to make its move higher today. So I would be wanting to go long, or at least looking to go long until price shows otherwise in NASDAQ. One hour. Yeah, so I want to see that this imbalance right here breaks. Price trade above this imbalance or this gap that has held price lower. That held price lower yesterday. Came into it, retested it during the early morning session. Now we're consolidating, so I want to see it continue to expand. I would like to see that this stays open. Previous 4-hour. Yeah. I don't want it. I would not want to see price come back to this gap here. It could, but I wouldn't want to see that though. When we see that the market is respecting a lot of bullish arrays, you see that we had this gap here. The market has respected that and started to run higher from off of that. So like I said, it could come down into here. I would prefer that not to happen. I would prefer this to stay open and continue to go. But that's what we're looking for. And NASDAQ, it's a higher prices today. S&P, same situation. We see it's a sideways movement. We do have a divergence between S&P and NASDAQ. If we see that NASDAQ has taken out yesterday's low, while S&P has not. So S&P will be the strength. We'll see S&P leading, and if it does run bullish today, we'll see S&P leading with an idea of all-time highs being looked for once again. 819. If we can get a strong run, if the market does want to run today, we'd be looking for that. And we're close to the 50% level of this wick on this daily candle. So I want to see the market getting above that, and if we can, all-time highs once more. So that looks pretty good. Up and down to the 4 hour. And again, you're just seeing sideways movement from continuation from yesterday of the market just moving sideways. And yeah, so we could possibly get some retracement once the market does take out yesterday's high. I can see that because ES is leading in strength, so it'll possibly take out its high first, while Nasdaq will look to catch up, and we'll have to wait for some type of retracement. I want to be watching how the market, once it does straight to this high, what it does after this. And I think once it takes the high and gives us like a retracement, then it should start to run again. But pretty much the same thing in ES. We're looking for in Nasdaq. We can get a close above here, then all-time highs is all but certain. One hour. Pretty much the same thing. Got Nasdaq down into that fair value gap that we was looking at. And I actually did not want to see it come below this for this previous 4-hour open. I didn't want to see it come into here, so see, this is what that candle currently looks like right now on the 4-hour. This would be London's low if it does trade below it, and we will see that ES is also not, looking to take London's low right now. So volume has just traded above consolidation highs. And is now retracing too. We could possibly get another just non-clear directional day today. I wouldn't necessarily want to be playing shorts. Gold and silver is moving sideways, but silver's looking like it's selling off a little bit, and yeah, gold is just moving sideways right now. The dollar is moving sideways too. Last line of defense right here for NASDAQ longs. So I'm starting to get some retracement. YM's back bullish. So my first break, yes, I want to see it close back above here. and get back above our previous 4-hour open. That's a good sign. Now we see the market is consolidating after this run lower. It's another good sign. We have these two gaps that are created in price at this at our daily open. So now I want to see the market start to expand from here, violate this. It's another good sign. I want to see it through here now. We got two fair value gaps created now. With this move up, I want to see it continue to push higher from here and through here. So this is not a fair value gap now. That retracement. But we are still respecting this. And again, I want to see the market close back above the previous 4-hour open if we are still going bullish. I want to see the market expand right here. Dow's up real strong right now. Russell's also up right now too. Not as much though. I don't even want to see it come into here. If it comes into here and we're going lower, still got some more room to go lower. And this is what these candles look like on the 4-hour right now. We got about 15 more minutes until the 4-hour closes. NASDAQ is below its daily, below the low that was created at Asia. While ES has not yet taken its low from London or yesterday's low still. So back above those, back above this low again. We have somewhat of a divergence right now between IM and ES. Right here is London's low from and ES. It has not taken its low out. So I want to see if it's gonna get going right here. Coming up on 7 o'clock hour as well. Go to a 1 hour. We see what these candles look like. They don't look too good, especially this one. So I want to see it closing back above Asia. And we still got ES leading in terms of strength. Yeah. Still just moving sideways. Gold and silver still moving sideways too. So, and I just don't like this price action right now, especially when we know that we're just moving sideways. So, if we don't get something that's like clear and obvious to me, we're gonna not be looking to force anything. I want to see NASDAQ above this gap right here. We're not going to force anything though, especially with it just moving sideways. We setting up for the news release that's coming out tomorrow, more than likely. So ain't no need to rush or force it. Again, I want to see NASDAQ back above this this high right here, or the low that was taken out from Asia session. This is a good sign. Right here will be my bullish change in the state on the 5-minute time frame. This is a fair value gap. I want to see it through here. Inversion gap, that's a good sign as well. We got about 4 more minutes. That's a great sign. I see it close through here. 87, 83, 77. All right, so we got a violation of one bullish array or bearish array, and we have the market looking like it's trading above our change in the state of delivery area at the daily open. I like this. I want to see this be a strong area of support to get the market to move away from here if it is in fact still bullish. And back above that previous 4-hour open. All right, this next candle I want to see expand away, expand higher. We got about 1 more minute until the hourly open. And this is what these candles look like now. This is a good fade. All right, we're gonna be looking to take a trade. Yep, it's a good fade. All right, we're gonna be looking to go long this buy. could take it there.
Order filled.
It's a good move away. Move my stop to below this gap that was created right here on the 5-minute. I'll buy 3 more here.
Order filled.
My stop is going below. My stop is at the daily open. I don't want to see it come back to that daily open. If it comes back to the daily open, you should cut. It should cut your trade. This is now an inversion fair value gap. So we should expand. If the market is bullish, we should expand from here. NASDAQ is now leading in the strength. With this low that was taken out, you see NASDAQ did not take out that low. Right here. And yes, did. These are all good signs though. So I really want to see ES start making this move now. Currently coming up on 15, 7:15. We've already closed this imbalance. I want to see it closing back above here. It's got a long fade, but it could do it. So we got this consolidation for the last 10 minutes right here, right? These two down close inside bar candles. We still have this gap below price. So I want to see this next 15 minutes. We start expanding higher. We see that NASDAQ has just traded below those lows I was talking about earlier, where ES has already taken them out, and now we have NASDAQ is lower, and ES is now leading its trend. So I want to see it expand from here. That's a good sign on NASDAQ side. really don't want to see them taking out these lows right here. It's very problematic for me if we cannot get back above and stay above where we currently are right now. So I'm gonna move my stop to this low because it should not come back below this low if we are in fact still bullish. And then I want to see us closing back above this whole high that we have to this to the left of us. Let's see if Mark can make his move here. We got about 10 more minutes until this 15-minute candle closes. This is problematic. And we see we keep closing back below this, the high to the left. That's why I say it's problematic. Because this could just have been a stop hunt, retrace higher, and then continue to come lower. But like I said, I want to be bullish on the day, so I don't want to see the market closing below its open. And then we're also at this 4-hour open. And it's just really consolidating around the 4-hour and the 1-hour open.
Stop filled.
You see, NASDAQ is also consolidating at its daily open. I want to see if it's gonna jump right here though. So we got 1, 2, 3, 4, 4 down closed candles. All right, I'm gonna try one more long. See if I can get a feel.
Order filled.
All right, I want to see it run here. Could just be another instance of my moving my stop too early, but we gonna find out though. 7:30 right now, so we'll look to the higher time frame, see what we got. So we got 3 up closed candles inside of this. Still be inside of this imbalance on 15-minute. On the 30, it's not looking good either. Inside candle. We are still above. We are still inside this gap right here. And on the hourly, we are in an inside candle as well. I don't like this.
I have a question.
Yeah.
Okay, so you know how there's a expansion and then consolidation and then expansion again?
Yeah.
Um, what direction is SPY in? So we had at the opening of the market, it was going down. Did it change direction?
Yeah.
And we expect for it to go up after this consolidation?
Yes. So the market came down and you see created a lower low, lower high, lower low when it traded it back above this high. And this is why I was saying I wanted to see it stay above this high, right? So
Hmm.
when it's traded above this high, we create a higher high. There's a low, high, higher low. So we're looking for a higher high, back above this high right here. But right now we're in consolidation, right? So it could it can easily be that because we're not closing back above this high, that this is just a stop hunt and the market wants to continue to come lower. But like I said,
Come lower in consolidation though?
no, come
Or
lower.
oh,
Like this is, this is the actual move.
yeah, okay.
Yeah. So
I want
this
to
is this my what I was seeing at the beginning of the market or before the market opened was that my anticipation was that we were going to trade higher, going towards these highs. But if it's not time, then it's not time. So this is basically and the fact that it is consolidating so much and not running away from or not trading higher like I've anticipated it to. We possibly might not get that. So it's just still, waiting for the market to show otherwise,
right.
that the idea is
But-
off.
Which is time. Like
I mean, it's
it could go up, but will it be during our market sessions? Is
right. Maybe it's not time right now. Maybe it still
yeah.
has a little bit more lower to go before it starts to go higher.
Okay. When you have time, I would like to be able to understand the what it looks like, the turning point, to be able to identify when it has turned direction. Because I'm always seeing stuff and I don't know if that's what I'm looking at. Because then I'll sit and I'll wait, and then just end up being in the trade. Um, but I can't tell.
All right. This is no longer a good trade. You can cut it.
Order filled.
So you were talking about you said you wanted to know about the changing directions.
Yes. Like say I place a trade because I see or I anticipate something based off of my evaluation or observations of the candles, and I'm in a trade, and then say it say I see like swing highs or swing lows or something is happening and it's starting to shift. Um, I want to be able to identify so that I have the confidence to either stay in the trade or to get out of the trade. I'm getting stuck in staying because I'm not sure, or pulling out because I'm not sure. And then, you know what I'm saying? I'm taking losses because of that, because I'm not able to identify what's really happening. And, with the rules of trading and how everything moves, I'm thinking that I have an understanding, and I'm like, okay, it's not going to do that because it can't do that. But you know what I'm saying? I'm not identifying everything correctly.
The market can do whatever it wants to do. So,
Right.
but there are certain signatures that you that we're leaning on for the market to show us. You know what I'm saying? Like whether we're right or wrong about the trade idea, right? And so, say for instance, like I'm gonna just walk you through the trade that we just in right now. So I'm gonna drop it down. Right. The consolidation might be over now. 748. Yep, that makes a lot of sense. The last
Do you
15
wanna
minutes
you
is
wanna
about to
hold
start
out
running.
on explaining this to me then, in case you wanna get
Nah,
back in?
no, I'm taking the trades that I wanted to take. So
Okay.
when the market dropped down, we seen it start to shift lower. What I started to look for was the market at okay, the market moves in phases, right? So we had this up move, which is retracement, followed by this expansion. We had another retracement and another expansive move lower. We had another retracement and then another expansive move lower. We had another retracement, then another expansive move lower, right? Yeah, I think this is a long now. But so what I'm looking at is at the moment that the expansive the next phase of expansion began, right? When the market starts to trade back above that level, that's when I'm looking for a possible change in the direction, right? And if we are bullish, we're looking for the market to now show us that it wants to expand higher. So at the point at which the expansion phase in the opposite direction of what we anticipated to move starts to occur, like again when I seen that the market traded and then it started to create signatures that I wanted to see, which is it started to disrespect the gaps that were to the left that should have held price lower. If it was going to continue lower, the market started to trade through it and then actually come back into it and trade higher, right? So because of that, now I'm looking for the market to start to retrace. Maybe it's going to retrace a little bit lower and then start to expand higher again. And so that's why we took that trade. And when you are in a trade and you have an idea about what you want to see the market do, you're basically just monitoring price action to show you whether you are on the right side or you're on the wrong side. Now, consolidation doesn't necessarily tell you whether you're on the wrong side or not, because it's just moving back and forth. It's creating highs, it's creating lows, it's taking out the highs, it's taking out the lows. It's moving sideways. You know what I'm saying? And when you're expecting the market to expand, you want to be looking at the market taking out highs and keeping lows intact. This is what I was saying during the trades. Like, okay, um, there were certain lows that I didn't want to see the market take out, and that's why I was moving my stop. Now, probably was premature. We would have been stopped out of this trade anyway, because it actually did end up coming back to the stop that I had initially placed it at, which was the daily open, right? But I didn't want to see it come back below the daily open. Probably could have, placed it below the these gaps that were right here, which is the strong support level that I had outlined when the trade was happening. But for the most part, though, this is what I didn't want to see. The market trading. If we were going to continue to expand higher, I didn't want to see the market trading below these lows. So like right now, I think that because we have traded back above that high that I was talking about to the right here. Now the next logical high is you want to target this high, because this was the high that took out this was the move that took out this high, right? So now that we're in this consolidation and it looks like this consolidation is over, now the market should expand higher. And coming up on the 8 o'clock hour, this so what it looks like now, this candle on the hour chart. So right, you have this green candle with this down move. We would now expect or anticipate for the 4 hour, if this candle does close green, we would anticipate because now this is a swing low, right? This is a swing low, and this was the start of that expansive move down. From here, we had a retracement or a trade higher, and then the market started to expand lower. We want to see the market close back at the starting point, the opening of where that expansive move happened, which is right here. So we will be looking for price to start trading to and closing above 77.89 to show us that the market is actually ready to go for yesterday's high, because this is really like the only thing that's standing in the way of price trading to yesterday's high. When it crosses the threshold of the origin of the expansive move, then that's when you start to anticipate, okay, that expansive move lower is over after it trades above the origin of it and closes above it, because sometimes it can trade to it and then continue to come lower. You want to see it closing above the origin of the move, so that gives you confidence that, okay, that move is over now, we can start anticipate higher prices. And so and also in monitoring the lower time frame, that's why you want to
Yes.
always be looking at the higher time frame to know, like, okay, where's the origins at? You know what I'm saying? Okay, the market started to expand lower at this point. You know what I'm saying? At 5 o'clock, it started to expand lower. So once we get above that 5 o'clock opening and closing above that 5 o'clock opening, then you can say, from on an hourly perspective, this is our next target. The high of the day, which is at 77.96, and yesterday's high, which is at 77.98. You know, so 7,800. But again, we're in consolidation. So, looking from a higher time frame perspective, this is what the market is doing. It's creating highs, and then it's creating lows, and then it's trading above the highs, and then it's trading above the lows. On NASDAQ, it's creating highs, creating lows, creating lows, creating highs. It's trading above the highs, taking it out, trading above the lows, creating lows, and then trading above below them. So
Yes. Yeah, that was going to be the topic of my journaling today, was the higher time frame, and how, in the 1 minute there's a lot happening, but in actuality is nothing's really happening
right, and that's why you have to
in the
be.
bigger picture.
Exactly. So that's why you have to always keep your eyes on the bigger picture. What's happening on the bigger picture? The higher time frames is telling you everything. You know what I'm saying? Like, but the market structures, and you see structure building from the lower time frame. And so that's why, you know what I'm saying, you are, when you're in a trade idea and you're managing, you're using higher time frame targets, but you're managing from lower time frame structure.
The higher time frame gives me more confidence, and then, like, because I had noticed in the last few trades that I took, I was looking at the 5 minute and the 15 minute, and then I would look at the 1 minute when I was trying to get out of something,
Yeah,
like
that's a good, because you can't get caught
when
up
I was
in
uncomfortable.
everything
I
that's
looked at
happening.
the lower time frame.
Right. So you can't get caught up on everything that's happening on the lower time frame. So, but in general, you want to be staying higher, right? You're really only looking to lower time frame for like an entry, and to like manage your trade, right?
Yes.
Because again, there's so many candles that are printing on the lower time frame that you could easily get caught up in thinking that, like for my first trade, right, moving my stop loss too early, allowing for the market to trade below the lows, but still have the idea still be, what I'm saying, solid from a higher time frame perspective, because that trade below that low is still, like, this was the first trade I was taking out of. That trade below this low is still inside of this gap that I said should be holding price higher, right? So, and then even even with even with the market trading to the daily open, and me saying I don't want to see the market trade back to the daily open, it's still in an area where there's a lot of support. You have for the market to run higher. You got the daily open, you got these new week opening gaps, you got the new day opening gap. Like, there's a lot of support still here, that if the market does come to here, you would anticipate the market to bounce from here and go higher if you were anticipating the market to go higher, right? You got it's just that we're inside of this large sell side imbalance, and so that we're getting a lot of consolidation inside of these imbalances. But this is the move is really, I mean, the down. I wouldn't say that this move down was the move. Uh, it's just that we in consolidation, and like I said, probably during the PM session, it'll probably trade higher, get out of this consolidation, and start to run higher. Because when the market didn't take out this low, when the market didn't take out London's low and started to run higher, for me, that's a change. There's a divergence between uh NASDAQ and ES. So any other time, this is a slam dunk. You feel me? Like, the market will run from here. We would see that ES would have a whole lot of strength to go. This is like a good indication that, we could be going higher, or to support the fact that we're going higher. It just so happened that we ran into consolidation, and so yeah, that's pretty much it. The change in the direction happens at the moment that the market, like for right here, right? The actual change in direction from a 5 minute standpoint isn't until we get to the New York Open, which is when this down move began. And so that's why on from the trade, I was looking at my first target to be the New York Open. See, it's still just consolidating, right? It's still just moving these candles, wicks, bodies. They're not expanding in one direction. They're just staying the same. In this constrained area. And it's already 8 o'clock now. Sweet. 8 o'clock. So we see NASDAQ is trading above the highs, but ES is not though. So and I guess you could make a case for it. But then you would have to wait for the market to trade below here. Why? Because this was the most recent expansive leg higher. If you were to say like, okay, the market just trading below this high in order to come low, you would have to wait for the market to trade back below this low right here, which is the origin of this up move, in order for you to say, okay, the market is starting to come back below the lows. Like right now, ES is trading, and I would say that if the market is coming lower, then it's going to come back below these lows right here, previous lows of the day, or yesterday's low. But I didn't want to I didn't want to sell today. I didn't think that this would happen. I thought that the market would have looked to go back above yesterday's high. If anything, Asia was the low of the day, and then we started to expand higher. So, but New York opening just completely undone that. So, yeah, that's it though. Any other questions? And this is also why you try a couple times to see if, you know what I'm saying, like your idea is gonna play out. And if it doesn't work, you don't have to force it. That's why, you keep a stop loss, because although you can have an idea of what could happen and you could be right about it, you could be wrong about the time in which it's going to happen.
Right. Right. I'm still not comfortable with the stop loss. I don't know why, but like I know it's a good thing, but the fact that I still don't have confidence, like, and I just sit here and watch it instead of putting a stop loss. I don't know. I don't know what the issue is with me in that.
The
But
stop loss is your friend. It's for your protection. It's for your mental capacity to be able to still, you know what I'm saying, be engaged, because you got to think about it, right? Let's say for instance, you was in a trade and you didn't use a stop loss, and the market started to, go against you. It could put so much squeeze on you that you're in emotional turmoil to the point where you're not even really analyzing what's happening anymore, right? So, you know what I mean? It could put so much squeeze on you to the point where you can't take it anymore and you just get out. But at that moment that you get out, the market then starts to turn. But if you would have had your stop loss on and you would have been taken out at a certain time, or whatever point that you would have been taken out at, and then you could have, in that time that you're not in the trade, continue to analyze price and wait for it to show you that, okay, now it's going in the direction that I anticipated to go in. Now you could put on a trade and be like, all right, now I want to try this one out. You know what I'm saying? And that one might not work. Like the second one I put on, I thought it was going to go. It didn't work. It's going to be days where it doesn't work. And it could be consecutive days where it doesn't work. But your stop loss is what's going to keep you engaged in the long run and be able to have money to participate in the move when it does start to, you know what I'm saying, when you are right. If you're not using a stop loss, you're gonna get drained, because rarely do you get into a trade and it just goes completely to the point that you want it to go to, or trade in the direction that you anticipate the trade to. You're gonna have to sit through drawdown. And so and then there's also instances where, you know what I'm saying, you get into a trade. When you get into a trade and you get stopped out of the trade, that allows you time to reflect.
To do that.
It allows you time to reflect, to say, okay, am I on the right side? Is the structure showing me that we are actually bullish? Or is the structure showing me that we're coming lower? And if the market is showing you that it's coming lower, then you could then get in line with that. You know what I'm saying? You could then change your bias and get in line with what the market is showing you. Now, I had an anticipation of what I wanted to see in price. The market took me out. Now we could analyze and say, okay, what's happening right now? From a higher time frame, if we jump back to the hourly, I zoom out, take a look at what's happening. I say, we had this down move the market is consolidating right now. Now to open up, it's look like it's expanding lower. We also have a swing high, right? That was created. And what could the market be drawn towards if this swing high has been created? Right? It's already disrespected this gap that we anticipated price to hold from right here. So I would say, hey, all right, the market has started to violate support areas for bullish prices. So now when it comes back into it, maybe we could be going short. We could be possibly coming lower. And you would use this area that was support now, or support for bullish prices is now support for bearish prices. You could use that as an area on which you could put on a trade to target lows, right? But I personally didn't want to see the market come lower. I didn't anticipate the market coming lower, so I didn't really want to sell. Sometimes it's best to just be able to pick one direction for the day, and if you're right, you participate in the move. But if you're wrong, you allow the market to show you that you're wrong, and whether you want to engage or change your bias or anything like that is, it's up to you. But sometimes
It
it's
makes me
good to
feel
just have.
crazy when I do that. When I have an idea and then it don't work, and then do the opposite of
Right,
what my idea was,
because then
and
you're chasing.
and like forcing it.
Yeah, you're
I,
exactly. I mean,
yeah.
over time you'll get more comfortable with, like, okay, the market is showing me that it wants to come lower, so let me get in line with the market, right? But when you're starting out, you want to just stick to one. You want to stick to one side of the market, and let the market show you that you're wrong,
Right. Instead of just shifting, and now you still don't have an understanding.
right? Because now
You're just going with, what I'm saying.
yeah,
Yeah.
because when you get taken out of a trade after you change your bias, and then you see, oh man, it's actually going in the direction I thought it was gonna go. Let me get back in and move with that direction. Then you get taken out again, and it's like, you know what I'm saying? This game is about being patient, managing yourself, managing your emotions, because this is money on the line. You know what I'm saying? And we're attached to money emotionally. You know what I'm saying? And we don't like to lose. And all of these things play on us and influence us to make decisions that aren't when you learn how to read the chart, which they don't help. Our emotions, the emotional pull on us, that happens when we're reading the chart, does not help. We have to remain in a clear headed space to be able to engage. That's why the stop loss is important. That's why knowing what you want to risk is important. Knowing how much you want to lose on the day is important, because after that you walk away. You walk away. If
Mhm.
you've lost how much, whatever amount of money you've wanted to lose on the day, you've lost it. Your stop loss has been triggered. You probably, for me, what I do is I split the risk, or the amount of money that I'm willing to lose. I split it in half. The first trade, I put on half of it. If it shows me that I get taken out, I still got one more shot. I still got one more trade. You know what I'm saying? I take the second trade. If it's showing me, if I get taken out of that trade, I've lost the amount that I want to trade, and that's it for me. I come back when the market is showing me something better the next day. You know what I'm saying? Like, although it looked like it's coming down, you know, this is where we're only 15 minutes into the 8 o'clock hour.
And
It
it's
could
still the
easily,
same. It's like literally mimicking the last little movements, the up and down. So
right. We haven't went anywhere. So this one, consolidation is not the markets to be trading in. You want to be trading in markets where it's expanding in the direction you anticipate to go into. We look
where you're
at
actually profiting.
Right. You look at the dollar, still ain't went nowhere from where it opened at. So right here, this is where it opened, came down, boom, boom. Now maybe it's starting to run higher, but who knows? This could be it. It could possibly make this. This could be the high of the hour. So same thing with Nasdaq. It really ain't went nowhere. It's still in the range that it created within the first 15 minutes of the market opening. Gold literally has went nowhere. Still within that range of what the swing high and the swing low that was created when the market opened. So in these types of markets, the stop loss is really your friend, because it shows you, oh man, we in consolidation. It stops you out, takes you out. You're able to zoom out. Man, we still in this holding pattern.
How do you feel about stop losses in consolidation, though?
Well, you have to.
Just stay out of consolidation for one, and it wouldn't happen. But
Right, but there are the moves that happen in consolidation. Well, the origins of expansive moves happen when you know what I'm saying, inside consolidation, and when you're breaking out of consolidation, right? So today was just me trying to catch the move inside of consolidation, possibly expanding out of consolidation, and obviously that didn't work. Which the market still wants to consolidate. So you take that information and you do with it what you may. whether you want to still try to engage it or, you know, move to the sideline and, you know, wait for better price action. The choice is yours. You just know that, you know, uh, the risk,
I've been,
the risk in
I
that, you got to accept it.
yeah, I have been like I don't know if you've looked at my Robinhood history, but it's getting out of a trade and then end up getting back in it, like retrying those trades, um, getting back in on the movement that was anticipated. Um, I get upset with myself when I'm in something and then it, you know,
It moves in the
it goes the
direction.
other. I get out of it because of whatever movement that it made that put some anxiety or fear in me that I was going to take a loss. So I get out, and then if that movement was really nothing, and so now I'm getting back in. I'm getting back in, but when I'm jumping out and getting back in, I'm actually taking more of a loss. Um, is where I've been just trying to be content and sit in it rather than jumping out and having to jump back in. I was doing well. I did well on a couple trades, but then like I started losing myself. I went
Yeah,
from I forget where my account was at, but I went from that to like 900. And I was excited, like, yes, I'm building it back up, and then end up losing it.
yeah. That's why you know what I'm saying. You want to remain level headed, and you don't want to be. Um, you want to have an idea. It's not about the the how much you want to make is the wrong mindset to have. How much you're willing to lose is what you should be going, what you should be framing
Cor-
your day.
Considering
Yeah,
and
your
going,
you know what I mean, going into the trade. That's what you should be. That's the mindset that you should have when you enter in a trade. It's not about how much you're willing to make, because you don't know what you're going to make. You don't know if this could be a big day. You know what I'm saying?
yeah,
But if you know how much you're willing to risk, you could then say, okay, I know I'm willing to risk this much. At that point, if I'm willing to risk this much on a trade, I'm then waiting for, okay, at that point, I'm managing when I am going into profit. I'm managing, okay, how much am I up compared to what I'm risking? If I've completely made back, or, you know, completely and in profit what I was willing to risk, that's a risk-free trade. If I've made double that, then I made double what I'm willing to risk. You know what I'm saying? And at that point, is what do you want to take? What does the market look like it could give you? If I've made double, for me, and for in general people that trade in general, a 2-to-1 trade, you making double what you risk is a great day. Not too many, even making back what you was willing to risk is 100% gain, like we talked about. 200%, that's a W, double times over, right? So if when you go up in profit, then that's when you're managing, or you're anticipating, okay, what can the market realistically give me, and what am I willing to take? Where do I want to get out at?
okay,
But at the outset though, you're managing, or you're only thinking about what you're willing to lose on the trade, and then once you're in the trade, you're just managing based on price action. So that's pretty much it.
what's happening right now with ES?
Or just traded below the London session low, traded below this low, and now it's coming back into the range that was created in the morning. Right now, I would have anticipated it to continue to come lower, to take out previous day's low. That's the most logical thing, that when you are anticipating, right, the market is expanding in a certain direction, you see this swing that was created, you would say, okay, it could come to these lows and to this low. When the market creates a swing high, you're looking for lows. It's already taken out London, now it's retracing, it's going back into the range. So yeah, who knows what it's going to do, but that would be what you would anticipate, and you will place your stop loss above somewhere that would show you that the market doesn't want, for me, for instance, when the market created this inside of this fair value gap, it traded into it, started to sell off. This move back into here probably would have been a trade, and then you would have, but I would have been looking for the market to trade below previous day's low. Now it possibly still can, but when I'm in this trade, my stop loss is going above here because this was the last area that the market traded into to find support for lower prices. So if the market is still coming lower, it shouldn't trade back above here. But this is a lower time frame too, so you got to think realistically. That small gap that's up there that we see on the 1 minute, is actually this just a portion of this entire gap. So really, my stop loss you would want to place your stop loss like up here. Into like 7, you would have entered like around here. Stop loss would have been up here. Yeah, like right here. And you would have waited for the market to trade to 762. And with what you was risking, 774, 780. That's a little over like a 1 to 1. So like 100%. So you'd have made back what you was willing to risk, and then you could have decided whether you wanted to cut the trade or whether you wanted to try to see whether it was going to continue to come lower. But that's how you manage the trade. Yeah, if I had to say, I think the market is going to trade below this low right here. You got Dow selling off too right now. So
Is it always reaching for something? Is it?
yeah, even in consolidation, it's just a momentary pause, but it's always reaching for something up.
So if there's ranges above or below, or say if there's a range below that it could be reaching to, and there's nothing above, but it's going up, does that mean that it's going to create something, or it's going to eventually go downward?
Say that
Okay,
again?
so say there's like the 4 hour open, or there's a previous day low, and there's nothing above. There's no ranges above to seek out, but say there's a green candle, it's going up. Eventually, do you anticipate for it to go down to reach those ranges below?
If the market is consolidating, if the market is expanding in a situation where and it's at its all-time highs, when there's nothing for it to reach for, then you just start looking for big figure numbers. But when the market has something to the left, you're always looking towards the left for a target, whether it be an imbalance, whether it be liquidity. You're always looking for the left. You're always looking to the left for the market to show you that, you know what I'm saying, there's for your target where you're anticipating the market to reach towards. So there's always a target, especially if the market is inside of a range. And once it breaks out of that range, and you get a scenario where again it's just looking like it's going towards all-time highs, then that's when you just start using the numbers, the bigger figure numbers.
Okay, thank you.